Day's lowest point down almost 2%. But we are now joined by Shaleen Kumar, the India small and mid-cap analyst at UBS Securities. He joins us from the sidelines of the UBS conference. First up, thank you so much for joining us, Shaleen. Give us a sense of how exactly Q2 has panned out as far as the small and mid-cap space is concerned. Earnings has been quite a bit of a big disappointment.
See, it was a mixed quarter. That's the way I put it, right? So the way I look at the correction, I think it was valuations are catching up to the reality. That's the way we look at it. So numbers or the expectation were a little elevated, and there's a more of a reality check that's happening over here. Obviously, over the past few quarters, few years, the valuations have gone up significantly high for many of the mid caps, and the performance has been lagging. It's easy to say right now, but this was kind of coming, right? It was kind of coming. But you see that there are certain sectors where stocks have performed and where the numbers have come, and market has rewarded them as well, right? So it's not just pure play corrections that what we'll be seeing. There is a divergence, but the way I see it is that market is right now not giving any leeway to any kind of if you're missing out on performance, etc. Right? So the market is going strict in a way.
Okay. Shaleen, we are talking about that big fall in the mid-cap index that we saw in October. Despite that, the flows in the mid-cap funds in the month of October came in at record highs. So what are some of the themes that you think are working right now, some of the fund managers who are looking at these themes, and which are some of the sectors from the mid-cap pocket that you would be bullish on?
So I can talk about the themes where we are bullish on and where we had seen a lot of resilience, and one of them is healthcare theme, healthcare services, right? So where, for example, hospitals, diagnostics as a space, there is a clear leg of tailwinds is there in form of change in patient mix, payer mix, right? And we could see that bigger hospitals are doing well. So that's one theme clearly playing out. We still feel that diagnostics continue to do well over here as well. So that's another theme which we are quite positive on that. Second thing which we like here is hotel sector, hospitality, and that's in an upper class and premium class. Premiumization story. That's where is still playing out. More and more people are opting for holidays and vacations and don't mind spending money. And when we look at the room rates of India versus global room rates, there is a lot of gap there. So we believe that room rates can continue to increase, and we had seen that in the results. Besides that, some of the themes which I believe can or will continue to perform is something like manufacturing, right? So China plus one theme is still relevant, and that will continue to play out. There were some good numbers in that theme, right? Obviously, a lot depend on a bit of a macro, but that is very, very much resilient. So manufacturing in the auto anchs or manufacturing in other segments is very much resilient. So that's where we are positive.
Shaleen, when you're talking about outsourcing theme, especially the auto ancillary theme, when you're talking about the US and the Euro markets, both of them are seeing a bit of a degrowth as far as, the auto OEMs themselves are concerned. So in that context, where do you see growth coming in, and how do you see Indian players, Indian auto ancillaries actually benefit in this difficult environment?
So see, the way to play it is that there is a pressure over there on those things. But when you look at certain amount of the auto anchs, or rather the part of the auto segment is like the forging part, for instance, right? The industry itself globally is pretty fragmented, right? So and the more and more pressure comes to them, they will resort to outsourcing. Yes, I agree on that if global auto demand will be under pressure, then there may be some pressure that is likely to come on Indian manufacturer. But at the end of the day, outsourcing to India is a solution for global auto players, auto as well as industrial players. So that theme may have a short-term pain, but over a medium to long term, it is pretty resilient.
Shaleen, you're also bullish on exchanges as a theme. Do you think that part of the rally is largely done? Because even valuations are high here. If you're talking about valuations in the mid-cap space, is there anything specific that you like? And wealth managers, they are also they are also gaining from the big equity run that we are seeing. Is that a space that you like as well?
See, exchanges, again, very interestingly, while they have rallied, but valuations are not much different from like year, 2 years back. Those exchanges, the performance of those exchanges is largely driven by earnings upgrade and all, right? So at least on the valuation side, I'll say there is not so much of discomfort. Now, exchanges are a play of efficiency, and any economy which is growing and, where the economy is going in a digital form, etc., and where the efficiency is building in, exchanges play a very, very big role. If we compare exchanges, Indian exchanges, whether it's commodity, energy, right, we see them are minuscule compared to global exchanges, right? So at the end of the day, if we compare by any metrics, like as a percentage of GDP or as a percentage of the business sizes, commodity market size, energy market size, etc., there is a lot of headroom for them to grow, right? And as I said, specifically in those spaces, we haven't really seen a very big uptick in valuation. There is some bit, definitely, right? So, but not like other sector, right? So it's largely earning driven.
Understood that, Shaleen. So you like, select healthcare diagnostic players, you like select outsourcing players, exchanges, you do see some operating leverage kicking in. Which are some sectors, especially post Q2, that you will strictly be avoiding, and maybe, some of the sectors that investors can stay away from? What is your view there?
See, again, there is no sector I'll say strictly avoid. It's like on watch, and I'll be mindful about on the thesis, right? For instance, a chemical sector, right? So we have seen a meaningful amount of disappointment in the chemical space, right? And that's largely because that the whole thesis of specialty versus commodity kind of falling apart, and we are facing challenge from the Chinese manufacturers who are gaining market share in that segment. That's our thesis. So there, the China plus one strategy, I will be mindful about just going by what has happened in history. So unless we see demand really picking up in the global environment, or we see maybe new administration in the US doing something against our competition in China, I'll be very, very mindful about picking that space. The second space where we haven't seen really any uptake or kind of disappointed is in our home improvement segment. So that's remain a challenging space as well. And I'll say I'll be in no rush to enter into that segment, because again, while there are earning cuts, but valuations are still there what they were, and even the management confidence or the underground checks are not guaranteeing any meaningful jump.
All right. Okay, thank you so much, Shaleen, for joining in today with that take on the sectors you're bullish on and the ones that you think investors should stay away for the time being. Let's slip into a short break now. On the other side, we'll be in conversation with Hindalco's management on their Q2 performance. Stay tuned for that.